wants to go. Right, but why don't we kick off? Give people a sort of 1 minute description of you, the company, and what you're up to.
Baselode Energy's uranium exploration company in northern Saskatchewan's Athabasca Basin area, which is home to high-grade uranium. Our exploration approach is different from a lot of our peers in that we're looking for near-surface, basement-hosted, high-grade uranium deposits that are amenable to open-pit mining strategies. And in our first drill program, we think that we've discovered one of those with our Accio deposit.
Good stuff, good stuff. I think what people don't realize, every time I speak to you, you're usually wearing a Star Wars t-shirt. So
we gotta find a way to get to the future. We need nuclear energy for that. So gotta live the dream.
Good stuff. One of my favorite uranium CEOs. Right, should we talk about the Athabasca plays, and then we'll talk about where because you're just outside Athabasca, right? Southwest and south of Athabasca Basin. That has got the reputation of being highest grade, best place in the world to be mining for uranium, but you're just sitting slightly outside. So what's your thesis?
The thesis is built on the history of mining in the Athabasca. And if you do look at that history, the Athabasca is a big bowl. And most of the original mines in the Athabasca were all open pits or underground mines outside of that bowl. There's only been 2 mines in that bowl with the sandstone. That's Cigar Lake and MacArthur River, both because they're over 300 million pounds and they're both over 25% average U3O8 grade. So they're the unicorns of the industry. They're the most valuable rock mined of any commodity. You can take Red Lake's or old Gold Corp's Red Lake. They're high grade where they had 2 ounces per ton average grade. It doesn't compare to what they're mining at Cigar Lake or MacArthur. But they had water issues. They flooded. So it's
in a basin.
In a basin, yeah, exactly. Wow. Who would have thought? But so that's the issue, and people are exploring for that because they see the value of the rock, but they don't. I don't think that people really understand the whole business side of things, and that what was mined originally in the open pits built all of the mills, and they weren't these massive deposits. They weren't these 20% deposits. They were much smaller in size, much lower in grade, but they were economic. And that was the big magical thing. They were economic, and that's what makes sense. So we've taken that approach and we've applied it, knowing that in northern Canada, you can't always see the bedrock. It's covered with glacial overburden. So there's the potential for a lot of mineralization hidden underneath that overburden and just never been visualized or conceptualized. So that's the approach that we take, is, again, looking for those open pit style deposits.
Okay, so we've got with 3 projects. You've got Hook, Catharsis, and Shadow, right?
And we recently staked a 4th project, Bear.
Bear as well. Okay, fantastic. And you recently raised some capital. So where is that being directed to, and what for?
We raised $3 million flow through the end of last year, and we raised an additional $5 million flow through just announced a few weeks ago. Put us at $8 million flow through. We spent $1 million on our Catharsis drill program earlier this year, leaving us with 7. And we just launched a 10,000 meter drill program on our Accio discovery.
Okay.
We're budgeting about $6 million for that, but I think that's over budgeting. So we're well capitalized to complete that drill program and add meters as we deem necessary.
Okay, so how do you plan all this out? Because if I look at most of the uranium juniors stock price, it's just tracking uranium price, right? That's all it's doing. Whatever you guys do doesn't seem to make a dent in terms of the people's appreciation of what you're doing. So you raise this flow through money. You're going to be doing some drilling. You're not tempted sometimes just to sit back and go, I'll let the market do the heavy lifting.
We did that. We did that in July, August of last year. We still had plenty of finances in the bank. Yeah. We completed 22,000 meters.
Did it work?
Yes, I think it did work because we kept putting out really good results.
Okay.
And the market didn't respond.
Yeah.
So it was the right decision to scale it back, take some time out, preserve our capital, and wait for a better market. That market's not fully here yet, but it is getting there. And after speaking to people in the industry, in the nuclear industry, that this is such a hot market, it makes sense to get the ball rolling now. So we couldn't just sit back and wait another year to wait for the market to catch.
Today now shouldn't really affect you. It's going to be the advanced developers, right? So again, why the decision to raise money?
The uranium market right now is looking a little bit more prolonged. Like, it's not one of these historic markets where they're around for about 5 to 10 years and then they just evaporate. This one looks quite prolonged because we've got a lot of build outs happening globally, probably more so than it was even done in the 70s. Well, not quite, because 70s was the boom period, but since then there hasn't been really a big global build out that we're seeing now, which is really being dominated by China.
Yeah,
putting in 5 reactors every year. So that is the push. And if that market is prolonged, then I think that we do have that possibility to get there with Accio. But and that's part of the exploration strategy and the thesis, is that because we are looking for mineralization that is nearer surface, we have shallower drilling, so we don't need as many meters. We can drill more holes per meters, so everything's kind of expedited on our end. Like, we should be able to have a resource by the end of this year after only drilling 30,000 meters.
Yeah, sorry, I forgot. I mean, shallow. How shallow are we talking about?
Mineralization starts as shallow as 25 meters beneath the surface.
Okay. Yeah. So that's interesting.
It's pretty shallow. It's about the width of this stage, maybe a little bit more.
Not a lot of overburden. No. Okay. Yeah. Okay. So just talk to me about the markets, because I think not everyone here is a uranium bull. So we talk about some of the supply demand fundamentals. Most people look to spot price, but it's driven actually by term price contracting that these developers and producers can get in place. What are the other kind of big drivers people here should be aware of?
I would say following the contracts is probably the best bet to follow. Spot price is almost artificial, but it gives guidance to the general market on what uranium is doing. But I would highly recommend follow Cameco, you follow Kazatomprom, the larger publicly traded companies, as they will announce any contracts that they have. Cameco recently announced 250 million pounds of contracting. That's huge. That's not a small number. Yeah. That's quite a lot of uranium that they've got to pump out of the ground and bring into the market over X amount of years. So when you see that happen, and that hasn't happened in 15 years, that's big news. That means that the utilities are getting near the end of the fuel that they have available to them, and they need to start securing supply. And it's not like gold or anything like that. The uranium is completely different. From mining it to having the fuel fabricated, you've got a number of processes that you have to go through, and that's basically a 18 to 24 month turnaround time, if you're lucky, if there's no delays in the in some of the steps in the way. Okay. So they have to plan forward for it, and we're starting to see this happening now.
Right, and talk about the role of utilities and also some of the new financial entrants into the market, like Sprott Physical, the Uranium Trust, Yellowcake, and I think there's one out of Zurich as well recently as well. Taking this inventory out of market, and the role that that's playing in terms of changing that, this was squeezing that gap between supply and demand.
Well, that's exactly what they've done. They have removed readily available supply from the market, which does put that squeeze on the whole supply scenario. And I honestly don't know what they're going to do with the physical uranium. Obviously, I'm assuming they would sell it, but that's not my purview. So I don't think that's as ongoing as it is now. Like, I think a lot of that has calmed down, but there was a large amount of physical uranium bought off the market, and you could see the market react to that in 2021. If you go back and you can look at the spot price and even follow some of the uranium plays and follow their stocks. There's quite a few big peaks in 2021, and that was as soon as Sprott started buying. And then once they stopped, everything else came down though, and kind of bottomed out again. But
and I think there's a slight disruption with the Russia-Ukraine situation again, is I guess changing the direction and flow of some of that uranium enriched or otherwise. In fact, you mentioned Kazatomprom. They seem to be doing deals with China as well. So everyone is keen to lay their hands on future supply of uranium, but the market stays steady. It's not reacting to any of this supply destruction that's happening. So when's it going to go?
When people are fed up with lithium. Hopefully it'll come soon. Right, okay. Hopefully it'll come sooner rather than later. It's a game of patience.
Right.
And we got a lot of new players in the space. You have a lot of younger people who are always trying to hop on the next big thing. So cannabis in Canada was a big thing, cryptocurrencies, lithium. There's always these bubbles. Like uranium had that bubble in 2021. It will come back.
Right.
It's one of these things that has to come back. Uranium price, there's been a lot of educated people saying that we'll see $80 a pound minimum contract prices, probably $100 a pound. That will incentivize mining. That's basically a double of the spot price that it is now. So that's a huge bet on uranium, that it has to go up. It's not a question of will it go up? It has to go up. We can't turn off the reactors. We can't turn off power. It just doesn't make sense. So
where's it coming from? Give people a sense of the number. Okay, the demand numbers at the moment in terms of uranium is what? What are we going through?
Oh, I don't know the demand numbers off the top of my head, but I know that it's larger now than it has ever been. Okay. China's building out 5 reactors a year, or at least planning on it. That's a huge build out. Okay. That's basically China's living in the 70s right now, building out the way the rest of the world did. So once they catch up, and then India on top of that, Europe is building out more reactors. Canada and the States are looking at building out small modular reactors, so SMRs. Once those get permitted, which are apparently months away, that we can start seeing the regulatory process complete on those and start rolling out SMRs, that can revolutionize the whole nuclear industry, as they're smaller and deployable in many different areas that you couldn't deploy other type of power utilities, energy utilities.
Well, let's look at some of the things which may help the Canadian Athabasca base. I'm going to bundle you in with the Athabasca guys and gals. It was obviously the critical minerals list, the conversations coming from your cousins down south, and the money that they're making available, not great amounts, but starting to talk a good game with reactor extensions and so forth. Money from DoD, DOE, etc. You guys will be allies. The expectation is that you'll supply into the US market. 25% of uranium consumption is by the US market, which is some £50 million a year. You are working under the burden of long lead times for permits to be able to do anything. It seems you've got First Nations issues, ESG issues, permitting issues. It's just red tape abound, it seems. Given the nature of what you're pulling out of the ground, fair enough. Do you need that to change? Do you need government to kind of lean in and listen and help you with that?
It's a very interesting question. Oh, it's a well thought out one.
They're here, by the way. Listen, be careful.
I would honestly think that I do think that the regulatory process is pretty sound for what it is in Saskatchewan, and I think it's a good process. It hasn't been super lengthy. Does it need to change? Honestly, don't know. Because again, I go back to the history of mining, and the last open pit mine, uranium mine that we had in Saskatchewan were the Sioux deposits, and that was 2005, 2006, 2007. So recent. And they, from discovery into production, was less than 10 years. And that's quite typical of northern Saskatchewan turnaround times for mining. For open pits anyways, discovery to production, anywhere from 6 to 12 years. That's the time frame that we're kind of working with. And I think that's a pretty reasonable time frame to work with. I don't think it's not like we're in a different jurisdiction, BC or Labrador or something, where the policies are not in place. There's never been any mining, never any milling in these places. So you have to reinvent the wheel out there. You have to put all these places into these other jurisdictions. That already exists in Saskatchewan. We're good for that. The infrastructure is already there. The roads, the power lines, the mills, everything's already up there. So it's just down to the permitting issue. And in some of my initial talks with some of the permitting authorities is that because of our deposit being what it is, being that open pit style of deposit, there are a lot of things that we can kind of avoid by not building mills and by not having these massive scale deposits.
Okay. Well, and talking of time frames, we're running out of time. So thank you for that in terms of the market overview. Shallow, high grade, Athabasca Basin. Yeah, have a look, folks. Thank you.
Thank you.